How do I stop IRS wage garnishment or bank levy? Good question. When the IRS takes your money, it doesn't send a polite warning first. It drains your bank account and garnishes your paycheck or files a lien against your home. And suddenly, you're the one scrambling. I've sat across the table with a lot of people here in Tacoma who thought they had more time until they checked their balances and realized the IRS had already made the first move. I'm John Sterbick, a tax attorney here in Tacoma, and I deal with the IRS collections and enforcement actions every single day. In this video, I'm going to walk you through what actually happens when the IRS takes your money, what your rights are in that moment, and the specific steps you can take to stop the bleeding and get back in control. Because if you don't act quickly, the IRS doesn't just take your bank account once, it will keep on taking. And the longer you wait, the fewer the options. You have to protect yourself now. Protect your income and your property. What the IRS is actually doing. There are two primary collection tools the IRS uses: wage levies and bank levies. A wage levy means IRS contacts your employer and directly orders them to withhold a portion of your paycheck and send it to the government. It's often far more than what a typical creditor could take because this is federal law. Washington's community property rules do not override IRS authority. A bank levy is even more aggressive. The IRS contacts your bank and freezes everything in the account up to the amount you owe. The bank then holds those funds for about 21 days before sending them to the IRS. If you have a joint account, your spouse's money can even get caught up as well. This is incredibly stressful. But the IRS must follow a procedure, and that procedure creates opportunity. The 30-day window most people miss. Before the IRS levies your wages or bank account, they're required to send a series of notices. Many people ignore them because they're overwhelmed of fear. That's a mistake. The most important document is called the final notice of intent to levy, and your notice of your right to a hearing. Once you receive that notice, you have 30 days to request a collection due process hearing. If you file this request properly and on time, collection activity usually pauses. That means new garnishments and no new bank levies while your case is being reviewed. To request this hearing, you must file IRS Form 12153. If you miss that 30-day window, you lose your significant rights and leverage. So if you're within that window right now, act quickly. It's critical. If the levy has already started, you still have options. The fastest way to stop a wage garnishment is to enter into a formal installment agreement with the IRS. Once you're in an approved payment plan, the IRS will generally release the wage levy. The key is structuring a payment plan you can realistically afford. The IRS uses national standards for allowable expenses, but Washington has a high cost of living in many areas. If your actual expenses are higher, we need to argue that very point. You need to be properly documented and presented. The goal isn't just to get into an agreement, it's to get into one that you can sustain, because there's no point in getting into a payment plan in which you're going to default. In situations where you truly cannot afford to make payments, you may qualify for Currently Not Collectible status, CNC. This applies when paying the IRS would prevent you from covering basic living expenses such as housing, food, and utilities. You will need to further document that situation, but if approved, then collection activity can be put off for several months. Don't forget, this situation is not permanent. The IRS will renew your collection activity later on, and you're back in the same boat. But during the meantime, we can get your financial documents in order so that we can figure out a reasonable payment plan or maybe an offer in compromise. In more severe cases, bankruptcy may be appropriate. When you file Chapter 7 or 13 bankruptcy in Washington, an automatic stay goes into effect, stopping all collection activity, including the IRS. Now, depending on the age and type of the tax debt, some debts may be dischargeable, while others may be repaid over time under court supervision. Bankruptcy is not the right solution for everyone, but it does impact your credit. And in certain situations, it can provide a powerful reset. The IRS does make mistakes. Sometimes payments aren't properly credited. Sometimes the wrong person is assessed. Sometimes payroll tax liabilities are attributed to the wrong business owner. If something doesn't add up, don't assume the IRS is correct. Gather your records and challenge the levy promptly. The faster you act, the better your chances of correcting the issue before funds are permanently transferred. The IRS is a procedural agency. Deadlines matter. Forms matter. The way your financial information is presented matters. If you miss a deadline or submit incomplete documentation, your leverage decreases. But wage garnishments and bank levies are not permanent in most cases. They can be stopped, reduced, or released with the right approach. If you are facing a wage garnishment or bank levy in Washington, open every IRS letter. Confirm your deadlines. Protect your 30-day hearing rights. Explore a payment plan. Consider hardship if appropriate. Evaluate bankruptcy only if necessary. You are not powerless, but delay is costly. But if you're wondering whether the IRS might accept less than the full amount that you owe, watch my next video on how an offer and compromise works and what the IRS may be willing to settle for. That information can potentially save you thousands. I'll see you next in the next video.